Welcome to the weekend edition here at freetrainingvideos.com. Let's go. I just have a little bit of time here, but I'm going to get to a lot of information. I want you to follow along. We're going to be moving very fast. This is the S&P Daily. We do have a rising wedge, and people have been asking what are the failure rates on rising wedges. Tom Bilowski, who I featured in yesterday's video, he has his interpretations and percentages on what he sees, and I'm going to go back in time. I'm just looking at the S&P. What I have learned to do just in my tenure of being a trader is take away the opinions of talking heads. Doesn't mean I absolutely dismiss them. What I do is I just say I'll call it like I see it. For example, a comment left by, what's his name? Livinon 3 times, or live on, I don't know how you pronounce that, but anyway, he says this: instead of trying to get ahead of the breakdown, and he calls it the imminent breakdown in the S&P and the markets, he says he's going to wait for a clean breakdown to happen before he pulls the trigger. Bravo to you, kudos to you, I applaud you. That is precisely what I'm waiting to do. I'm not going to go short until it in fact proves to me that we're going to break down and go short. Now, when it comes to rising wedges, I see them much more probable than what some people do. And let's just go about the S&P. We're going back to 2006 area. Here we have a rising wedge. What is a rising wedge? It's when you have two trend lines condensing or converging onto each other. And these are bearish formations. This one did crash and burn here, and then we come rallying back up. What type of reversal pattern is this? That is a double bottom, and if it pierces the middle part, that confirms your double bottom, and you should rally, just like what this one did. It did rally. So, rising wedge did crash and burn here. Let's go and see. We have another rising wedge right here. Rising wedge, and these two lines out here in space would be converging onto each other, and boom, look what happened. Big crash. I'm going to give myself a little more chart to look at here so we can see this. So boom, we come crashing back down, lower swing lows, and oh, what do we have here? What's an inverted head and shoulders. You can go to freetrainingvideos.com, click on the chart school, and you'll see exactly what these things are. These are bullish formations. Sure enough, we go right up. But what did we go up into? What's called a rising wedge. What should happen? Should go down. And sure enough, big breakdown. Big breakdown. Big breakdown. What type of triangle do we have here? It's called a symmetrical triangle. Which direction? Well, technically, these could go either direction. They're symmetry. So both the bulls and the bears are winning, and both the bulls and bears are losing at the same time. Right there, cracked. I can tell you already, the bears have full control now. It should drop, and there it goes. It does drop, and look, what type of triangle do we have right here? See this? One coming down, one coming up. What is this? Again, a symmetrical triangle, the same one we have here. So, will this one go up or down? It's anybody's guess until it happens. Let's watch this. Right there, it went down. Who's in control? Bears are. Should continue down, and sure enough, it does. Let's come up. Now, what do we have right here? It's a double bottom. It's confirmed when this middle area is pierced, and sure enough, it gets pierced, so it should go up. And let's watch this. What type of formation do we have here? Rising wedgie. Boom. Broke down. Who's in control? Bears. Should continue down, and this one does. All right. Let's just follow this down. Hey, another rising wedge. We broke down. Chops around here a little bit. Maybe this is what Bilowski talks as a throwback, and he calls that a failure. But look what happens. It just crashes and burns. It helps that we're in 2008 too. And then, all right, and there we're all in ours. All right, now we have another one. See these two lines? What is that? Rising wedge. Yeah, what should happen? Should drop. If it does drop, who's in control? The bears. And if the bears are in control, it should just continue down. So, that is my long-winded way to show you not to ignore these things. They do drop. And you have to call a spade a spade. If it walks like a duck, talks like a duck, quacks like a duck, it's probably a duck. So we have a rising wedge, and I think that we're going to be going down. And Silverfish asked, he says, how much might this dude break down if it does? Now, I think we reached our top because we're at the apex. I think that we're way overbought in the markets, and we're smacking our head on some nice resistance here. See that? So I think that next week is our best chance that we've had yet to just continue to break down. Now, where might this go? Now, one thing that you can do, and this is a little technical here, but I'm going to do what's called a Fibonacci extension. Go down here, and then I'm going to go up there. And here's some areas. If this thing drops, we could get right down here to 710. See 710 here? As far as the Fibonacci is concerned. Go down a little more, we could get down to 600-ish area, right just above 600. Those are targets far as the fibs would be concerned. Now, I think myself, just using trend lines, support resistance areas, that what we'll have here is a pullback, and we'll probably get to 800, 810 and hang up a little bit. But I could see us getting down here to the 750 and the 740 area yet again. And then this trend line here around 700. So I think it's going to hit one of those areas and bounce. And if we do bounce, it's going to give us a higher swing low. If we get a higher swing low, I'm telling you right now, I'm going to be looking to go long that market. But I'm looking for the breakdown first. I do not want to see it go below 666. If we go below 666, we're not out of the woods yet. Be looking for maybe an inverted head and shoulders. It'd be shoulder, it'd be a head, and maybe a shoulder over here. So, but we'll just call that when the time comes. Now, let's pull up the weekly. Here's the weekly. We do have a falling wedge. Falling wedges are usually bullish. And sure enough, this one did crash or crack up, break out, bullish. Now we're up 1, 2, 3, 4, 5, and 6 days. Usually your up legs on an uptrend are 5 to 6 bars. We're already 6. So we're pretty extended here. We are over this 20-week moving average, but I do expect to find a reversal pattern right here of some sort. Will it be a bearish engulfing, a bearish harami? It will be a bearish thrusting. Will it be bearish tweezers? What will it be? It's anybody's guess, but I look forward to seeing that, and then our drop. And if we can drop down here and then reverse, giving us a double bottom, I'm going long. So again, let's go back in time, and we saw this right here. We saw the same formation that I think we're going to be getting right there. See the higher swing low? That was back in 2002, 2003. When we got that higher swing low, look what happened. We just rallied up from that point forward. So will we get that here? If we pull back and pop up, will we get a higher low? Will we continue north? I think so. And now I will play it that way if it happens. So there is your 8 minutes plus some video. I rattled pretty fast there, but I hope it was quite educational for you, and I thank you for being a part of Free Trading Videos, and I absolutely enjoy going to Twitter, and I'm really meeting a lot of neat people over there on Twitter, and be a part, join up with us. We're Free Trading Vids over there. Team up with us over there, and we give we do some additional talking on Twitter that I think you'll find valuable, so you don't want to miss out on that. Till next time, we'll catch you at freetradingvideos.com.